What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we saw brand new all-time highs on the S&P 500 and the Dow Jones. We also had a very bullish day for the NASDAQ 100. So first up, let's take a look at the NASDAQ 100 Triple Qs ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so on the Triple Qs we went up 2% today and we had a very bullish day in opening yet again another gap. So the new gap did open up around 325 to about 327. So we do have that $2 gap open that will close right around 325. So if you look at this on a 1 hour chart, you can see that the market is still moving up in a very impulsive manner. We're getting gap up, bull flag, gap up, bull flag, gap up, bull flag, and we continue to march higher towards that price target at 334. If you remember back, I said we were going full bull on the Triple Qs on a close above 324, and that is why we did buy at the close of last week. That was a very bullish close, and again, we had a very bullish follow through today. Now, we do need to get a little more defensive because we are getting close to this price target at 334. We're only about $3 away from that price target, and I am expecting to see that level act as a very strong resistance level. Now, don't forget we have 3 gaps open below, but these gaps are not likely going to get filled as long as we're in this impulsive bullish rally. These gaps are very important to pay attention to, but they're not likely going to get filled until we see a stock market correction or we start seeing a dip in this impulsive rally. The question now is going to be, when are we going to find resistance and see that pullback? The most likely level we're going to find resistance at is going to be right around 334. This level is very critical for multiple reasons. The first reason this level is critical is because if we do fail to break above it, that will be a lower high on the daily chart. If you remember back, the all-time high on a closing price was right around 336.50, and 334 would be a very decisive lower high on the daily chart. If we break above 334, we're now looking at new all-time highs with a price target of about 341. So this 334 level is going to be the ultimate test for the bulls because it is going to be a very strong resistance that if they do break above, that will tell us to expect higher prices. Now, if we start seeing any amount of pullback, it's still possible that we find resistance above the gaps around 327. As you can see, the top of the gap is in the high 326s, so it is possible that we find support at the top of that gap, and in a very bullish market, we will see buyers stepping in and buying up that dip before the gap fully closes. We could also easily find support around 325 or 324. So there is a ton of support below the price action, so it's not likely that we're going to go back down and close that gap at 321. Is it still possible? Absolutely. But ever since we closed back above 324 and formed that daily higher high, the market is going full bull and it's looking for higher prices. You can tell by looking at the moving averages that we're starting to build up some bullish momentum, but we have not yet had the 20 simple moving average cross back above the 50 EMA. So I am calling this a buy the dip market because we do have bullish price action with a bullish trend. The 20 simple moving average should be crossing back above the 50 EMA in just a few more days, and then the trend will be fully bullish. Now, if you missed out on this entire move, you're probably getting FOMO, and I'm just here to remind you that we don't have a lot more upside until we get into resistance. So if you're still on the sidelines and you're still looking for an entry on this market, you waited a little too long because I don't really suggest buying in at resistance, which is 334. You're more than likely going to need to wait for a pullback, and that's why I always say you need to take on risk in this market if you're looking to make rewards. If you weren't willing to buy back here in the 313s for this possible bullish breakout, and then after the bullish breakout you still weren't willing to buy, then you basically missed out on a very bullish impulsive move. I can remember back when we were in this consolidation wedge, a lot of people were saying that I had a bullish bias, and if you look back at that and you remember we had a bullish bias because the weekly and the monthly chart were still bullish, then you can now understand why that's so important to have a bias. If you don't have a bias to a direction, then you're going to completely miss out on the majority of the move. Remember, you don't have to be all in the market. You can buy in slowly and you can accumulate, and you could always have cash on the sidelines in case you're wrong. You can always buy lower. So in retrospect, this was the best time to be buying, which was right around that 313 level, because we've been exploding out of those levels ever since, and I've been a net seller this entire time, taking profits as we hit these resistance levels. So by the time we hit 334, I'm going to be very defensive, and that's why I call it being cautiously bullish. You don't want to get overly bullish as we come into this very critical level at 334. If we can break and close over that level for a few days, that will increase the likelihoods that we're going into the 340s, but we don't just want to assume that we can get to 340 without at least testing and breaking above 334 first. It's very possible we get up to 334 and trigger a correction, and imagine that we come all the way back down and fill this gap at 321. So be flexible and understand all the scenarios in this market. Right now, the majority of this bullish move is expiring as we get into 334, and I don't want you trying to buy in and chasing something that's already made the majority of the move. So the upside resistance levels are going to be 334 and the previous all-time high around 336, and downside support is going to be around 327 and 324. You could see that the 50 EMA is all the way down here around 317, and it's very unlikely we're going to retest the 50 EMA if we continue in this impulsive bullish rally. Next up is the S&P 500 SPY ETF, and we saw SPY having a very bullish day today, going up 1.44% and blasting through my price target at 404. If you remember back to the weekend video, I said the SPX price target was revised up to 4060, and the SPX actually closed at 4078 today. So that is a bullish event for the S&P 500, which means we're already looking up towards that next price target, which is up here at $410. We do need to get one more follow-through close over 404 and possibly even 406 before we look up towards that level. And don't forget that we did gap up on SPY today, and that gap won't close until we go back to about $400.60. Now this gap is very significant, and I think this gap should not be ignored. The reason this gap is so important is because we gapped up to a brand new all-time high. There has been no price discovery on the S&P 500 in the open market trading hours from $400.60 all the way up to about $403.40. Now that's about a $3 gap that has never had price discovery in the open market hours. So I'm actually very defensive on the S&P 500 until this gap is filled. I do think a lot of buyers will step in and buy at this gap fill, but if they don't, we could be going all the way back down to 397. You could see the S&P 500 price action is still very bullish, well above the 5 EMA, and we're still in a very strong bull trend. So people will step in and most likely buy the dip, but as we hit these price targets, it increases the odds that we could go through a stock market correction at any given time. So we need to watch these important levels very closely, because as you'll see when we do the Dow Jones, we're getting very close to hitting all of the price targets across all of the indices. So on the triple Qs, we're looking for 334, and on the S&P 500, we were looking for 406. But now that we've broken above that level, we're looking up for 410. Don't forget about the gap fill down at 400, and the support level is at 397. The 20 simple moving average is now going to be right around 393. On the Dow Jones ETF, we went up 1.13% today, and we got very close to that price target at 336. Intraday, we got into the 336s, but we did not yet close above or at that level. We could see on the Dow Jones that we also opened a huge gap below, which won't close until we go back down to about 331.60. We do have support right around 330, and the 20 simple moving average is now sitting around 327. So you can see that all of these indices are coming close to their price targets, which increases the chances that we could see a stock market correction. I'm not calling for a correction because I'm not in the business of calling for a top, and we still have bullish price action with bullish trending. I just want you to be aware that the higher we go, the more defensive we want to be, and the more cash I suggest you raise. You want to sell as the market goes higher, and then you want to buy as the market goes lower. So the higher this market continues to go, I am more of a net seller, and I'm getting ready for more selling before I start buying back into this market. On the Russell 2000, we went up only 0.55% today, but we did get another price action close over top of the 20 simple moving average. So that's now 2 days in a row that we closed back above the 20 simple, but we still don't have any decisive bullish trending in the Russell just yet. We still need to get through resistance at 227, and we will have support around 224, which is the 20 simple moving average, and the 50 EMA, which is now going to be right around 219. If we can break above the resistance at 227, the next resistance level is going to be right around 233. On the Arkk ETF, we went up 0.65% today, and we did get another price action close above the 20 simple moving average. We're still trading well below the 50 EMA, which is right around 127, and in order to get bullish on Arkk, we need to get price action closes back above the 50 EMA. We have no bullish trending, and we're actually still in a bear trend, all of the moving averages still being stacked to the bear side. We do have a gap to fill right around 115, and we could easily come back down and retest that gap fill before we go back higher. But right now the bulls are still holding up above the 20 simple moving average, but they need to prove that they're going back into a bull market by getting back above the 50 EMA at 127. On the VIX, which is our fear indicator, we did close below that gap fill support at 18.2. So overall the VIX is a measure of fear, and we still see low fear in this market. I've said this many times before, but the lower the VIX goes, the more bullish we're likely going to be on the stock market, and the more likely we're going to see all-time highs. So we continue to see all-time highs in the S&P 500 and the Dow Jones, which is no surprise because there's not much fear left in this market. If we do see the VIX start spiking, we'll be more aware of a possible correction, but right now with the VIX below 18, it's very unlikely that we're going to see a stock market correction at these levels. On gold, we continue to bounce off that support level, but we're really just trading sideways, and we could be heading back up to retest the 50 EMA right around 1761. On silver, we're getting close to that price target around $25.10, but we haven't quite got there just yet. We need to break through that level to possibly retest the 50 EMA right around 25.70. Downside support is going to be way down here around 23.50. On Bitcoin, we're still struggling to break above that 59,000 level, and we're currently trading just a couple $100 below it. Remember that Bitcoin is way too far extended on a monthly chart, and I'm not expecting to see a lot of upside in Bitcoin this month. If we do, we'll likely stall out somewhere around 62,000 or 64,000, which is really not that much upside for the huge potential downside risk. Remember, if Bitcoin breaks back below the 50 EMA, which is now right around 53,000, that will trigger a waterfall flash crash correction, and Bitcoin could easily drop 20 to 50%. But for now, Bitcoin is still showing bullish price action with a bullish trend, so we'll give it benefit of the doubt, and we will look towards these upside price targets at 62,500. Just remember the risk in Bitcoin, and if you're buying at these levels, you're essentially buying in near a very critical top. On Amazon, we finally had a very bullish follow through, and we went up 2.08% today. We blasted right through that price target at 32.22, and we could be well on our way to retesting the resistance trend line around 32.70. Downside support is going to be 31.50 and the 50 EMA right around 31.78. We do have another support level which is down here around 30.90. So Amazon is starting to look really good, and that's now 2 days in a row closing back above the 50 EMA. So if we can get a bullish trend on Amazon once again, we could break out of this consolidation and go back into a bull market. On Tesla, we went up 4.43% today, and we finally got a price action close above the 50 EMA, but just $1 above. I would like to see follow through on Tesla and close back above the 50 EMA for another day tomorrow, and we will need to start seeing the trend go back into a bull trend. So slowly but surely, Tesla does look like it's starting to reverse this bearish trend, and we're slowly starting to see the bulls come back into the stock and driving the price higher. We still need to see a daily higher high, and we need to see a return of the bull trend, but the price target on Tesla is now somewhere around $762 to $770. So Tesla is starting to slowly but surely go back into a bull market, but we don't want to jump the gun, and we still need to see follow through and another close back above the 50 EMA. If you're buying at these levels, your downside risk is going to be the 20 simple moving average at 660 and the support level down here at 618. On Apple, we had a bullish day today, going up 2.36% and getting a price action close back above the 50 EMA. We still don't have a full bull trend, but we are starting to get that price action closing back above the 50 EMA. Very similar to Tesla is we need to see Apple follow through and get another price action close back above the 50 EMA tomorrow. We have upside resistance right around 127 and 130, and we do have downside support around 125 and 123. So Apple does look like it could be going back into a bull market very soon, so we need to see follow through with the price action going into the rest of the week. On the financial sector, we went up 0.78% today, and we're still maintaining bullish price action with a bullish trend. On the industrials, we went up 1.24% today, and we're still closing well above the 5 EMA with a very strong bull trend. On the energy sector, we dropped 2.39% today, and it looks like we're well on our way to retesting support at the 50 EMA. We're still developing bearish trending, and the price action continues to close below the 20 simple moving average. On the healthcare sector, we went up 0.70% today, closing back above the 5 EMA yet again, and still maintaining this bullish trend. The healthcare sector looks like it's getting ready to run and going back into a bull market. So going back to the S&P 500, you can still see that we have bullish sectors across the board, with the only weak sector being the energy sector, which carries the least amount of weight in the S&P 500. We still have low fear with the low VIX, and we continue to see this market grinding to new all-time highs. The biggest concern I have right now is that we have no price discovery on this SPY gap. We've never seen prices in the open market hours from 400 to 403, and I do think that that is a problem that needs to be addressed. We're very likely going to see SPY fill this gap when we see any amount of weakness in the stock market, and it should be very quickly filled. I do think that level could act as support, and it could help drive SPY to even higher prices once that gap is finally filled. So be very cautious as long as this gap is open, because this could be a very swift sell-off, and I really don't want to see you buying in at the top before a major correction. So we need to watch the price action very closely the higher we go, and remember that we want to be defensive bulls, and we want to be cautiously bullish the higher the market goes. We're getting into the territory where a stock market correction could be right around the corner, and I said we're not trying to call a top, we just want to be very defensive the higher we go. So it's going to be critical now more than ever to watch the price action at these critical levels and pay very close attention to what we're seeing the price action do at these levels. Don't forget, on the Stocks Channel Discord, I'm doing intraday updates to help you stay on the right side of the market and always bringing you brand new trade ideas weekly. If you're interested in the Stocks Channel Discord community, you can find out how to join by clicking on the link in the description of the video. So next up, let's take a quick look at our trade idea, which is still Shopify, and we see Shopify going down 0.82% today. We do have a gap fill at the support level, which is right around 11.12, and it is possible we'll see SHOP come down and fill that gap. That's also right around the 20 simple moving average, which is at 11.18. We have upside price targets of the 50 EMA at 11.69, and our next price target is right around 12.02. Shopify is still looking good, it's just cooling off a little bit, and it is finding resistance at that 50 EMA. So there's still plenty more upside in Shopify, so we'll continue to cover it until we hit more of these price targets. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.